Ladies and gentlemen, on behalf of Kaptify Consulting Investor Relations team, I welcome you all to the Q1FY27 post-earnings conference call of SKP Bearings Industries Limited. Today on the call from the management, we have with us Mr. Srinand Palshikar, Chairman and Managing Director, along with his management team. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I will now request the management team to briefly run us through the investor presentation for the period ended June 2026, the growth perspective and vision for the coming year, post which we will open the floor for Q&A. Over to the management team.
Thank you, Kaptify. Firstly, a very good evening to everyone present here. I am Shripada Patil, CFO of SKP Bearing Industries Limited. We have gathered here today for the Q1 FY27 earnings call. With your permission, I'd like to start. Next slide, please. As you must have seen from the results which we have declared, when we compare Q1 to FY26 to Q1 of FY27, we are seeing a year-on-year growth in operations, EBITDA, earning before interest tax, as well as PAT. So we are seeing a growth from quarter to quarter comparison. Next, please. A brief on this slide. As you know, previously SKP is already supplying to companies supplying in the defense and aerospace sector. So in this quarter, we are seeing a positive flow in this sector, as well as the segment has seen improvement, and we are having a approval process in one of these major entities. Next, please. For the manufacturing business, this year we have sorted it in manufacturing and renewable. As per the feedback in the last call, investors wanted to understand how the manufacturing business is progressing. So this is where we have shown a focus over here, where the installed capacity of ball, we can see at 2,000 tons per annum, their utilization of 17% is achieved. Whereas in roller plant, last quarter, that is the Q4 of FY26, and we have had a capacity addition in Q1. So you can see there is a marginal increase in the annualized installed capacity of Q1 FY27. And this is further deemed to increase in this coming quarter with the installation of various other machines. With the installation of additional capacity, our utilization remains the same. So as you can see, our additional capacity is already being booked by existing customers and the customers which were in the pipeline. And as you may see that if you consider our segment analysis, so ROCE of core Indian of our manufacturing stands at approximately 40 to 50%. Renewable energy is a standalone segment as it is running from past many years. Next slide, please. Our funds operation, the strategies are playing out well. We are seeing a quarter to quarter increase of customers in a marginal way, not in a substantial way. Even the SOPs of major clients which have increased remain the same. As we know, France works in the calendar year. So whatever change in projections for France entity is expected in Q3 of FY27. Next, please. Our standalone income statement, this is a quarter to quarter comparison. As we compare Q1 FY26 and Q1 FY27, this gives us a better picture because it minimizes the seasonal fluctuations. And as we can see on a quarter to quarter basis, we are having improvement in the top line as well as in profit before tax. But you can see the interest has increased because of the borrowing, as well as there are one-time financial costs which took place in this quarter, because of which we are seeing a drop in the PAT margin. Next, please. On a consolidated level, we are seeing a slight drop in the EBITDA margin. That is again because of the total expenditure. France entity, everything is similar as before. Regarding the revenue breakdown, we can see the Q1. As we have explained time and again that SKP is focusing on export and global companies. So with that playing out well, even despite our top line increasing, we are seeing that 5% of our revenue is still contributing to export. So we can see that export contribution has started increasing and it is expected to increase still further in this coming quarters. The FY26 industrial revenue contribution remains approximately same as this is an annualized contribution. Next, please. Next. This is a brief for those who are new to our company. SKP is a bearing component manufacturer, rollers, primarily needles, cylindricals, steel balls, and special purpose pins. We started in the year 1991 as a partnership concern. Over the years, we had expanded into different segments as well as in renewable. In 2022, we became listed on NSE SME. 24, we acquired the France plant. And just the next for the products, please. Next slide, please, Kaptify. Our board of directors, there are primarily four: Mr. Shinan Parshikar, Sangeeta Parshikar, Kishore Parikh, and Rajiv Lokre and Gautam Ganguly. Our manufacturing plants, we have total of 4 plants. One plant, which is from where SKP started, it is machine building and developments. Plant 2 is the current plant, the head office. Plant 3 dedicated for ball manufacturing. Plant 4 is in France. Next, please. So with this, I would like to ask our MD sir if they want to give some feedback. Post their discussion, we will open the call for question and answer.
Good afternoon, everyone. Thanks for joining our earnings call. As usual, though we are not compelled to do these earnings calls as well as the quarterly reporting, we are voluntarily doing to maintain our transparency and explain to our investors how the things are going. So we are look at the overall scenario. As SKP, we are doing good, not good, very good. Of course, results are a little fluctuating because of many situations, but we are very confident that the future time it is going to do very good. And we have a good opportunities. We are adding good number of customers, also very potential customers. First times it's the global customers what we are adding from India. We will be in a position to supply to China, maybe Japan, Korea. Already other sites, global other sites, already business has started. That is why you see all the increases are there. Also, there are potential to add another few more customers which are in pipeline. They are testing and validations because these are very large clients. So their process on onboarding is ongoing. Anytime we can have a good news and the process of onboarding will be completed and the business will be transformed into revenue. So these are the good things for the future. We have our global issues, like we had a big issue starting March from February end when the war started. So the fluctuations in all cost, supply chain disruptions, many issues were prevalent. But because of these, many customers are also getting affected. Also, the supply lines are getting affected. But with all these things, we are doing good. And for future, we see a very good potential for SKP. So this is all from my side.
Thank you. Thank you, sir. We'll now begin the question and answer session. All those who wish to ask a question, please use the option of raise hand. If you are unable to raise hand, then you can put your question in Q&A box. We'll take the first question from Nikita Jain. Please go ahead.
Hello, sir. Thank you for the opportunity. I wanted to understand, can management provide any directional indication of numbers of active customers today versus at the time of acquisition, or the extent of revenue recovery from pre-acquisition level?
For SKP France?
SKP France?
Yes, ma'am.
Yes,
Yeah.
SKP.
So basically, pre-acquisition level, if we consider as 100%, so post-acquisition, due to the change of entity and the regulation requirement, we had dropped to approximately 5 to 10%. And now we are at approximately 40 to 50%. But the SOPs are less. So we are expecting the SOPs to revise year on year.
Okay. I also wanted to know what gives management confidence in the continued recovery of France business. Are existing customers increasing their share of business, or is the growth primarily coming from new customer additions?
It's both actually. Usually in European and American countries, it works that they plan their entire year and the entire scheduling at one time itself. So usually, as per our in September to December, this is when the planning happens. So whatever SOP is decided during that portion, that continues for the next entire year. So as of now, we are having approximately a marginal, like approximately 10 to 20, 30% in various customers. So this is SOP is expected to change in Q3, in September to December. So this is what is giving us a positive look for the top line improvement. The bottom line is covered to the best of our ability as of now. So bottom line, we have optimized over the past 2 years, we have optimized the bottom line. And at the same time, the top line is increasing, but it's increasing marginally. Because we are seeing a projection, that is what is keeping us confident.
Okay, thank you so much.
Thank you.
Thank you. We'll take the next question from Harleen Kaur. Please go ahead.
Hello, am I audible?
Yes, ma'am, you're audible. Please continue.
Thank you for the opportunity. I have few questions. First is ball plant utilization remained at around 17% in the Q1 FY27 compared with the earlier expectation of reaching 50 to 60% utilization. What are the key factors behind the slower ramp up, and what is the current timeline for a meaningful improvement in the utilization?
Actually, we had seen an improvement in the month 3 of Q1. But because that is only one portion of the 2 months, so the average was pulled down. In the Q2, we are expecting a better utilization compared to 17%. So we'll be lying somewhere between 17 and 50 as per the projection.
Okay, ma'am. My second question is, how many customers are currently at the qualification or sample stage versus regular commercial production in the ball business? And what is the typical time required to move from the qualification to meaningful recurring volumes?
How many, in a sense, you mean in the number of customers?
Yes, ma'am.
Okay. So basically, we are having approximately 4 to 5 customers who are in the sampling stages, and the others are basically somewhere between deciding whether they want to start with SKP or not. So commercials are cleared, but they are not taking the decision to shift from China or not, or shift from existing source. So 5 to 6, we are already in the sampling stage, and there is a portion of which the SOP is lesser, so that SOP is also increased in this quarter. So which results will show in the coming quarter. I hope that Clarify your question, ma'am.
Yes, yes. I have few more questions. At 50 to 60% utilization, what kind of revenue and profitability contribution can the ball business potentially make? And how should investors think about the operating leverage from the existing capacity?
Regarding the revenue, I think we can just do a cross multiplication. If 17% is doing this much, so 20, 30, 40%, 50% will do how much?
I will answer that particular question. See, also largely depends on the product mix. So what type of product mix, what type of the raw material, which customers, what we are targeting right now? We are targeting a balance of around 30% of capacity right now, targeting with few customers. The revenue with 50% utilization, we can expect something closer to 30 crores annual revenue.
Okay, sir. Thank you, sir. So I have few more questions. At what utilization level does the consolidated EBITDA margin structurally cross 20%?
Can you repeat the question?
Yes, sir. At what utilization level does the consolidated EBITDA margin structurally cross 20%?
It's a very complex because you have clubbed two different continent. So two entities you have clubbed. Their both case scenarios are little different. But you are targeting a EBITDA margin of 20%. If I read it correctly.
I think she's
Yes,
trying
the
to
current.
understand when do we reach 20% EBITDA margin at consolidated level.
At consolidated rate, that's the thing, because it's a France, also India. If you take India alone, we know the numbers. For the France, we are already in the but give us some time, we will calculate and tell you this particular question. Shripada, ask someone to
I will calculate and give you.
do a maths and just let us know.
Okay, thank you so much, sir, for answering my question.
Thank you. We'll take the next question from Rudraksh Raheja. Please go ahead.
Yeah, good afternoon, team. Thank you so much for the opportunity, sir. Sir, you mentioned this ball plant at 50% capacity utilization, we can get around 30 crores of revenues. So for this year, sir, despite a slow Q1, are we on track to get to that target of 30 crores? Can we recover that in next 3 quarters?
What customer targets what we are keeping right now? We achieve this. We achieve this particular customer targets. Already our samples are through, commercials are through with some customers. With some customers, we are in phases of validation and all this. Commercial more or less settled with everyone. Once it is through, the process may take 1 month to 3 months time. If this process is through within, say, how fast the customer also, it depends on customer also. So suppose we consider from our angle, the customer does it quickly as per the need base. In 1 quarter, suppose all validation process will start. I think next quarter we can have a better utilization, start seeing better utilization. It cannot be all of a sudden, say 17% or 20% to 50%, but you can see month to month improvement. So, but quarterly it may have a better situation.
Basically, Rudraksh sir, because Q1 and Q2 is already halfway down, so 30 in this year. But Q3, Q4, that is the approximate projections.
Got it.
Yeah.
So maybe 30 to 40% would be better estimate for what we could achieve in the ball plants for the whole year.
Correct. Maybe better also, maybe better. How fast the customer, how responsive, also how the situation for the China situation comes, because some customers are major importers from China. For them, it's like just shifting, but it is not taking place.
Understood, sir. Understood. And sir, on the France business, are we on track to achieve break even this year? Is that process going well?
It may not be possible in this next 1 or 2 quarters. Maybe at the end of the year, maybe it will be possible. It is just boundary line now.
Got it. And sir, for that business, we were in talks with some top customers that we lost at the time of acquisition. You said we were still in touch with them. Sir, any updates on that front?
Yes, yes. They already requested samples. Now sample submission phase is already going on, commercial settled. So now sample submission and validation. The process could be quick also. Again, customer needs. But if we take from our angle, we plan to submit sample during this particular month. Once we submit the samples, if the customer validate it quickly and approve it, maybe the SOP will start this quarter itself.
Got it. Got it. So maybe not this quarter, but we should see some ramp up from at least from next quarter onwards.
Actually, this was our customer already there, one of the top 4 customer, top 5 customers previously. So they already have validated the site, everything. It's just they need a new thought process or new things, new designs. You know, in Europe, the designs also changes over a period of time. So they want to validate with all new thing with new company, new products. That's okay. So onboarding is quick also. So it's not like, but from our point of view, I think in this particular year we should do a break even.
Understood, sir. Thank you so much.
Thank you. All those who wish to ask a question, please use the option of raise hand. We'll take the next question from Rakesh Mehta. Please go ahead.
Thank you for the opportunity, sir. I have a couple of questions around the growth opportunity and customer diversification. So management had earlier highlighted a customer opportunity with potential revenue of approximately 100 crore by FY30 across the customer global facilities. So how has this opportunity progressed, and what is the current visibility on order conversion and revenue ramp up?
Shripada, you reply. You're mute.
You're on mute, Shripada.
I'm sorry, sir. Can you please repeat the question?
Okay, so management had earlier highlighted a customer opportunity with potential revenue of approximately 100 crore. So around FY30 across the customer global facility, how was the opportunity progress, and what is the current visibility of order conversion and revenue
The
ramp?
Yeah, it's going on well actually. The customer is acquired. We have received letter of nominations from approximately 3 to 4 sites for the Indian entity, others for the French entity, and the business has also started for these entities. The result you can see in the export percentage increase in our domestic revenue, and that is expected to increase further in the coming months.
Rakeshji, the site means it could be country or maybe multiple factories
Plants.
in one country.
Basically, it's like a big business, big what do you say, entity. Like there is a one major group, and then that group has multiple small companies in different locations. It might be having 3 4 companies in one country itself. That way. So one factory is called as one site.
And the size of the site could be 2,000 people, 3,000 people.
Right.
Okay, sir. So are the current growth opportunity primarily coming from increasing wallet share with existing customer, or SKP seeing a meaningful contribution from new customer additions?
Both actually. We are seeing a little bit of dip in Q1 for orders from a certain category of automotives. But as you can see, our overall industry distribution is very stable. So any one industry does not have much impact. So other domestic markets are stable, and we are seeing slight increase in other markets as well. So usually turns out that when the automotive is down, the market goes up, or if the market is down, the automotive goes up. These sort of things are happening. So balancing out, we are seeing organic growth in the current existing customers as well as new customers. Both are contributing.
I have one last question. So how was the customer mix evolve over the last few years, and is management seeing increasing diversification across customers, geography, and end use applications?
Yes. As you can see that majorly we were having Indian automotives. So now we have started adding export business and export OEMs and automotives. So diversifying that sector as well. And Indian automotive sector and other countries of a global automotive sector works maybe a bit different, not same. So that's a different diversification for our portfolio. Yes.
Thank you, ma'am. That's all from my side.
Thank you.
Thank you. We'll take the next question from Harleen Kaur. Please go ahead.
Hello, am I audible?
Yes, Arvind, please.
And I wanted to know, SKP simultaneously investing in capacity, France, and other growth initiatives. Can you give us the expected FY27 and FY28 capex and the corresponding incremental revenue and EBITDA expected from that particular capex, if it is possible to share?
Whatever majority capex which had to be done is already done. Whatever is happening now, it's normal. It's nothing like only for plant 2, we are having some projects which are still ongoing. That will show in this quarter. Besides that, whatever capex is there is normal expansion. So generally how it is, we do debottlenecking, we do some investments in R&D, we do some investments in machines, debottlenecking occurs, capacity is utilized. So this is normal capex, nothing substantial to disclose. And it's not like that is going to make any difference in the expense side or any other side.
Some of the investments, capital investments could be customer need based, like customer may require some particular testing or specific requirement. That specific requirement could be linked to their projected volumes. So this is normal. So normal capex. But we do always capex on year-to-year basis. So it is always investment in R&D, new machineries, upgradation, quality upgradation. So normal capex is always there, but big is already over.
Okay, sir. So, does the France subsidiary require any further meaningful capital infusion from the parent over FY27 or 28?
It will be support will be still required because till the time you don't do a break even, you need to inject cash. Now, whatever you must have seen that the losses which were there, now it is reduced a lot. And you need to pay, you need to be very compliant to the law requirements, taxes, social contribution. So you need to be compliant. So there will be some investments will be needed. Number one. Number two, we have some customers requirements, new customers requirements, which for future it's very potential to add these customers. So it is in thought process. We are still not finalized these particular investments. But once we have a customer clear understanding of like some sort of a MOM, and if it is need based, probably we may have to expand or invest in those particular new requirements, new machineries or now. It's very customer requirement based.
So, sir, how much and what return do you expect on that capital?
Currently, we are discussing with this. We are not still finalized. Once we finalize, probably we can finalize the amount of investment needed.
Yeah. And Harvin, there were these two questions which you were asking. First, in the current question on return on capital employed, as you can see in one of the slides, with the help of Kaptify, we have put in this figure. So you can see our return on capital expenditure is approximately 40 to 60%. And for the France entity, the returns are usually much higher. But because the entity is currently loss making, we do not see that effect directly in the balance sheet. This comes to your second question, which you were asking, at what top line are we expecting profit before tax of 20%? So as per the calculation is coming approximately 150 to 160 CR. So that's the approximate calculation, and we are hoping to achieve that in the coming years. I hope the questions are clear.
Thank you so much, ma'am.
Thank you.
Thank you. Sir and ma'am, we have one question in the chat. If a global bearing manufacturer can source the same rolling element from China at a lower manufacturing cost, what specifically prevents them from doing so?
For global manufacturers, China is not necessarily cheaper. India and China are at a similar level, maybe marginal difference, maybe 2-3%, but not majorly. No.
You have to have apple to apple comparison. Same quality level, same raw materials level, same everything. And then we are at the same, probably we are even cheaper.
The funny part is, in certain cases, SKP France is cheaper than SKP India or China.
Okay.
So it's a very dicey question.
Right. So he's asking further that can you quantify where does SKP's quality, delivery time, customization, and customer approval stand vis-a-vis Chinese?
For which entity?
For all the where does our approval stand, and the approval process we have?
Its overall approach. We can clarify one thing. When a customer has got two options, India and China, okay, or maybe SKP and another Chinese manufacturer. I give you a very live example. We were supplying to this particular global customer, and before SKP, there was another Chinese supplier. And the buyers were so much in problems. They had many issues, many issues, just not the quality, many issues. So they were tired. And when they came to know that we are in the same same domain and available, so immediately it was a shift. So it's very easy for the product what we are making, all the products whatever we are making. If we compare apple to apple comparison, you cannot do a lower grade or inferior product comparison with higher level. I'm not talking of SKP, but I'm talking of an overall. You cannot compare an inferior category product with a higher category product. You need to have apple to apple comparison. We are much better because we are more transparent. Number one, we are more customer friendly. Our QCD means quality, delivery, and the approach attitude is much better. And we are more customer friendly. So the customers like Indian style companies, maybe India, maybe France.
Thank you. Thank you, sir. He further asked, does your 110 crore target for standalone business will hold, or do you think we can get there earlier?
It's a bit difficult to get earlier, but if market plays out well, it can happen earlier. But those are ifs and buts. The 110 target is as per our projections and as per the current demand and visibility which we are seeing.
Okay, thank you. We'll take the follow-up question from Nikita Jain. Please go ahead.
Yeah. Hi, sir. I just had one follow-up question. What profitability can be expected in France once the business crosses break-even and utilization improves?
Very difficult question to answer. Very difficult question to answer. But the cost of compliance is extremely high in France. Extremely high cost of compliances. So first thing is, our focus is very clear that we have to first do a turnaround. No losses, nothing. Let us do that. Then we focus on the next target. See, it's very simple. We have done an investment. We are there to do business. We are there to deliver to the customer. So first we need to understand the local style functioning, what we did in past 1 year, 2 years period, to understand the customers, to do the business, understand people. All these things have been done now. We are at much matured level than when we did an acquisition. So our first focus is very clear: do a turnaround. Let us have a profitability level, something very little. Then we focus on a better product margin. Margins are good. no problem for the margins. You need to be cost efficient. So first focus is turnaround. Next is a profitability level. So I'm not focusing right now on what profitability level will be in operating, but we have many projects in hand. Let us do a turnaround first, and then we'll focus on this particular aspect.
Thank you, sir.
Thank you. We'll take the follow-up from Mr. Rakesh. Go ahead.
What is the EBITDA per kg or EBITDA per ton difference between your standard ball products and your specialized products?
Need to again repeat the question.
Sir is asking the EBITDA per ton or EBITDA per kg for your standard and specialized products.
Generally, I like to answer this question in a general manner because a lot of products and mixes are happening. So, as per my study, when niche products come or when we are supplying niche products where more R&D is involved, so there we are holding a margin that is profit margin of 50 to 60%, where it is standard part but complex. So where there are more manufacturing processes, more testing requirement, criticality of application, in those cases we expect between 30 to 45%. And a standard market product where quality requirement is very low, when the manufacturing processes are also very less and the risk is very less, in those cases we expect a 15 to 20%, 10 to 20%.
So are you actually getting nominated into new customers, or are we seeing incremental spot or volume requirement to SKP?
Your question is unclear. Can you please repeat? I'm
Rakesh, if you can just make your voice a little louder.
So are you actually getting nominated into new customers, or are we seeing incremental volume requirements to SKP?
I think I've answered this question earlier as well. We are seeing both. We are having new customers as well as new SOPs in current customers as well as schedule increase of existing parts.
Okay, ma'am. Thank you.
Thank you. We'll take the next question from Jignesh V. Please go ahead.
Yeah, sir. I joined a bit late, so to understand the new slide about defense, it would be a very small out of the total revenues in next couple of years, right? Because it's very specialized and niche product. So how are we planning to scale it up?
As of now, we are just focusing on our leverage. So whatever SKP strengths are, we are partnering up with the tier one and giving specialized products in these sectors. As you see in our industry breakup, defense contributes to, I think, less than 1%. And that percentage, I think, will continue because our top line is increasing.
Right. And going forward, since now the finance will stabilize maybe in 3 to 4 quarters. So apart from the Chinese competition, what kind of challenges that we see? Any slowdown in sectors that you are seeing that can impact our 110 crores domestic business?
Oh, yeah. I mean, sorry, you're asking for domestic or for France?
For domestic business, what kind of challenges apart from the Chinese competition can we see?
Recession?
Any slowdown in the
Global slowdown.
Geopolitical issues are a big problem, Jignesh. So what happens when you have warlike situation, when you have a difficult situation where instability is there? You know, in last quarter, the prices of crude fluctuated. Now, because of prices of crude fluctuated, what happened? All lubricants, inputs, all variation took place. So this happens over a period of time. So these are global challenges. So, and we have to live with that. It can happen anytime, and you need to be flexible and adjust yourself.
Right. Okay. Thank you.
Thank you. Anybody who wishes to ask a question, please use the option of raise hand. We'll take the next question from Rohit Balakrishnan. Please go ahead.
Yeah, good evening, sir. Ma'am, so you mentioned in your opening presentation that there was some one-off costs there were in this quarter. So can you maybe quantify that? How much was that?
For India or for France?
France Q1 finance cost.
For the France, you mean to say?
No, sir. I think there was some one-off non-recurring costs that we mentioned that because of that the margins went down.
Yeah, that is a
That wouldn't
financial
stand.
cost. Because we are doing some loan restructuring because we wanted some better loans or better products for financial products for SKP France. So for that, we are doing changes in the banking system. For that, some financial costs are involved. So this is like one-time processing cost or, mortgage and processing cost. So that was the cost, financial cost. That is why you see there is a large difference between 2 quarters.
Okay, okay. And sir, in terms of the QCO that one was expecting on the ball side, anything that you can share broadly, where are we? You mentioned that we've got some customers where the commercials also signed, but we've not yet got the SOP. So uh, is it like, are they, I mean, is it predicated on the fact that this QCO will happen and then, or I mean, if you can share whatever your conversations, whatever you can share.
It's the same thing. I think they are just doing a wait and watch. If the QCO is implemented, they have no option. Once it is implemented, no option. And it's complex. QCO is purely government and WTO, many hurdles. It's still not clear. Still, it is pending with government implementation. But currently, what we are offering to our customers is the same level. We are not talking of higher cost, higher prices, or anything. We are just matching the prices and giving solutions to the customer. It's very simple. We are not asking for any premium or anything. We are giving same cost, maybe even better cost level than they are currently buying. So his question is not commercials. It's question of commitment. How and how much they have to shift to Indian suppliers.
So if even if you're giving better pricing, so I mean, in your assessment, what is stopping them? Is it purely like inertia or what is it, sir? I mean,
Commitment. I will say your
Actually,
commitment.
basically, everyone's like the other way. Have you like if there are four people, they will ask that who has buy it from you. In that case, we will buy. So everyone is waiting for the other one to start that way.
okay, got it. And just last question, like I understand that in our roller business, our customers are mostly non-bearing companies, mostly they are tier one companies. Whereas in ball, we will largely sell to the bearing companies as a.
Both. It's both.
Okay.
No, it's just not bearing. It's both.
Okay. Okay. So in tier one, so I mean, in terms of the number of people who've approved you commercially, would you be able to just give a broad sense how much would be bearing companies, number of customers, or as a percentage overall? If let's say five have given, four are in bearing, one is no, a tier one. I mean, just
Current
broadly.
business, whatever we are doing, uh, bearing companies will be 10 to 15%. Around 85%, around 85% are non-bearing company, automotive.
Currently. Let's say when these customers start approving, I mean, when they start the commercials, will this percentage substantially change, sir? Let's say 1, 2 years hence, this 85-15.
Currently, we are discussing with bearing companies, automotive also, but bearing also. Yes, the ratio may change. Maybe 50-50.
Okay, okay. Got it. And last question was on so two questions actually. So one was on export. Ma'am, you mentioned that export is growing. So let's say 2, 3 years out, would you have a sense what percentage of revenue could be exports at a consolidated level?
My overall expectation was to increase, at least in the coming 2 to 3 years, to increase the export percentage to one of the top 5 sectors. So if my one sector is 20%, so approximately that much was the target. This year we are targeting between 5 to 10%. Next year furthermore, and after that furthermore, that way. But it's going to be organic, and all of a sudden in our industry nothing happens all of a sudden, so it
Sure.
slowly it increases. Like you've seen in the past 4 quarters, we are seeing slow increase that way, same way.
And so last question on France. So just taking from what you mentioned in one of the answers, so you're expecting that probably we'll exit Q4 of this year as break even. Is that understanding right?
Correct.
So,
That's the probability, yes.
and what is giving you that confidence, sir? I mean, I think you mentioned.
Customers onboarding, secondly, the volumes, because some
Hmm.
of the customers are already promised when they started business. They told us that you perform, and if you perform, no quality complaints, good deliveries, pricing is already done, no changes, no fluctuations. We'll increase
Share
your
of revisions.
SOB.
Share of business revisions are expected. That is what is giving us the
So new customer addition and increase SOB. These two are the positive. And already customers have already confirmed to us this particular thing in past.
Okay, got it. Thank you, sir. Thank you very much.
Thank you. Anybody who wishes to ask a question, please use the option of raise hand. Sir, since there are no further questions, would you like to give any closing comments?
First is thanks to all investors and those who joined our call. And we have tried to be more transparent. We have tried to improve all our presentations and transparencies. Some questions, even if some remained unanswered, they are free to contact us through Kaptify also and directly also. Probably Kaptify is planning to organize one particular event at the end of the month, probably in Mumbai. So maybe if some investors would like to join over there, also welcome. Thirdly, about the progress of SKP, we are constantly improving. You must have seen the capacities, those who are joining our earners calls since 1 year, 1.5 year, 2 years back. You must have seen the capacities which was 100 tons, 80 to 100 tons. Now, slowly over a period of time now, latest the presentation, what you can see is around 1,800 tons. And we are still operating at around 80% capacity level utilization. So this is a good sign. We are getting good customers. Outlook for SKP for the India entity is extremely good. Even for balls, we have a good customers feedback. Yes, it is taking time because we have many challenges, but we are on a positive side. I am very positive on that particular thing. I hope that this year we will be in a position to improve the performance drastically.
Thank you, sir. I think there is one question. Ishan, you want to ask a question? Okay. There is a request to all the participants that there is a polls and quizzes box. If you can just put your feedback, in that polls quizzes box. Yeah. So this is the quiz. You can just answer this quiz. And Shripada ma'am, I would like your also closing remarks.
Okay. Thank you, Capify, for the wonderful call. Thank you, all the investors who have been with SKP. Also, you're having your repeated trust in SKP since our IPO. So we came out with the IPO in 2022. Now it's been 4 years since, but we can see that SKP is growing. It's growing at a rate which we had never seen. There are a few downs, if we take on any big challenge, there's always going to be hurdles ahead. But the future looks very promising. The projections look very promising. Overall, for our country, India is now in a growing stage, not just domestically, even globally. Everyone on a global level is looking at India as a potential player in their supply chain. and we are looking to leverage that to our advantage. Thank you.
Thank you. Thank you, Shreyan sir, and thank you, Shreyapada madam. And thank you to all the participants for joining on this call. This brings us to the end of this conference call. Thank you.
Thank you, everyone.
Thank you.